It's Tuesday, April the 28th, 2026. You're listening to the DX Today AI Daily Brief. Today, Microsoft and OpenAI rewrite their landmark partnership, breaking the cloud exclusivity that defined the modern AI boom. A former DeepMind researcher pulls in a record $1.1 billion seed round to chase superintelligence. And Beijing slams the door on Meta's $2 billion push into Chinese agentic AI. Let's get into it.
Microsoft and OpenAI announced an amended partnership agreement, easing the exclusivity that has bound them since 2019. Under the new terms, Microsoft remains OpenAI's primary cloud partner, and OpenAI products will still ship first on Azure when Microsoft can support them. But for the first time, OpenAI can now serve all its products to customers on any rival cloud, including Amazon Web Services and Google Cloud. Microsoft will also no longer collect a revenue share from OpenAI. The companies describe the move as a focus on flexibility, certainty, and broader AI delivery. Analysts call it the most significant restructuring of an AI alliance in the industry's history.
Now to Europe's record breaker.
Ineffable Intelligence, founded by DeepMind lead David Silver, raised $1.1 billion at a $5 billion valuation, the largest seed round in European history.
From a record raise to a regulatory roadblock.
China has blocked Meta Platforms' $2 billion acquisition of Manus, a Beijing-based agentic AI startup. The country's National Development and Reform Commission ordered the deal unwound on Monday, citing concerns about the leakage of sensitive AI technology to the United States. Bloomberg first reported the decision, with confirmation from CNBC. Meta originally announced the takeover plan in December of 2025, and China's Ministry of Commerce had spent 4 months reviewing the transaction against export controls and overseas investment rules. The block marks one of the most significant cross-border AI deal rejections to date. Meta shares closed roughly 0.5% higher on the news, suggesting investors had already priced in the regulatory risk.
Next, robots that think before they act.
Stuttgart-based robotics startup Sereact closed a $110 million funding round to scale its AI robotic brain. The German company's Cortex platform allows industrial robots to reason about a task and predict the consequences of an action before executing it, a step beyond conventional vision and planning models. Bloomberg reported the round on Monday. Sereact says the new capital will fund commercial deployments with European logistics and manufacturing customers and expand its engineering team in Stuttgart and the United States. The investment lands amid a broader European push to build sovereign physical AI capacity and adds Sereact to a growing list of robotics labs commanding 9-figure rounds this spring.
Now to home services AI.
Avoca, an AI front-office platform for home services businesses, raised $125 million led by Meritech Capital Partners and General Catalyst, with continued backing from Kleiner Perkins. The round, reported by Fortune, values the company at roughly $1 billion. Avoca's voice agents handle inbound calls for plumbers, HVAC technicians, and roofers, recovering jobs that smaller operators routinely miss after hours. The company says it now answers calls for tens of thousands of trades businesses across the United States and is expanding into scheduling, dispatch, and follow-up sales. The deal highlights how vertical AI agents are reaching billion-dollar valuations by serving industries traditional software has long underserved.
Quantum is next on the docket.
Tel Aviv-based QuantumArt extended its Series A by $140 million, bringing the round total to $240 million. The startup builds optical quantum processors that combine multiple trapped ions on a single chip, an architecture it claims can scale faster than competing approaches from IBM and Google. AliWatch reported the extension Monday as part of its daily venture roundup. QuantumArt plans to use the capital to deliver its first commercial system to enterprise partners in 2027 and to expand its AI accelerator research program. The company joins a wave of late-stage quantum bets as investors race to identify the architecture that ultimately scales to fault-tolerant computing.
from qubits to enterprise integrations.
Tata Consultancy Services signed 2 memorandums of understanding with Siemens Energy AG and Siemens Energy India, expanding a long-running partnership into AI and digital infrastructure. TCS will combine its AI, data, and engineering capabilities with Siemens Energy's expertise in power generation, electrification, and grid technologies. A central focus is using AI to manage power consumption inside hyperscale data centers, with Siemens Energy India supporting TCS's Hypervolt platform for designing and operating the underlying energy systems. The deal, announced from Bengaluru, sent TCS shares up nearly 2%. It signals a deepening alliance between AI service providers and energy infrastructure firms as data center power demand reshapes the global grid.
Now to the Southern Hemisphere.
Anthropic officially opened its Sydney office today, naming Theo Hormuzis as General Manager for Australia and New Zealand. The move makes Australia Anthropic's 3rd dedicated regional hub, alongside London and Tokyo, and reflects a sharp rise in enterprise demand for Claude across Australian banking, mining, and government customers. Hormuzis previously led growth functions at Atlassian and brings deep relationships across the local technology sector. Anthropic's annualized revenue recently topped $30 billion, and the company has been racing to localize go-to-market and policy teams in regions where regulators are tightening AI rules. The expansion lands days after Google committed up to $40 billion in additional investment in Anthropic.
Cash to the small business front.
Dubai-based fintech Comfi closed a $65 million pre-Series A round led by Iliad Partners. The startup uses AI underwriting models to provide embedded buy now, pay later and working capital products to small and medium-sized businesses across the Gulf region. Comfi says the new capital will fund expansion into Saudi Arabia and Egypt, 2 of the fastest-growing markets for embedded finance. The company plans to deepen integrations with regional commerce platforms and accounting tools to underwrite credit in real time. The deal underscores how AI-powered credit decisioning is moving from consumer fintech into business to business lending, where data scarcity has long limited the speed and reach of credit.
Another stealth lab emerges.
Recursive Superintelligence, a 4-month-old startup founded by former Google DeepMind and OpenAI engineers, has raised at least $500 million in early funding. The company has not yet disclosed its product roadmap, but people familiar with the deal told tech startups it is pursuing recursively self-improving training systems. Investors include several of the same firms backing Ineffable Intelligence, with Sequoia and Lightspeed again playing lead roles. The pace of frontier lab formation in 2026 is unprecedented, with at least 4 superintelligence-focused startups raising rounds north of $250 million in the past 60 days. Hiring competition for senior researchers is now the tightest in industry history.
Now to streaming and the data layer.
Disney is reorganizing its streaming commerce and data teams as AJ Arora, a former Netflix and Amazon executive who led data science across Disney's direct-to-consumer business, departs the company. The shakeup, disclosed in an internal memo today, folds previously separate analytics, advertising data, and recommendation AI groups under a single unified leadership. Disney executives say the goal is to accelerate the rollout of AI-driven personalization across Disney Plus and Hulu, and to better harness viewer signals for advertising. The move follows months of pressure on legacy streamers to demonstrate that AI can lift retention and ad revenue at the same scale Netflix has reported on its recent earnings calls.
And finally, a humanoid robotics surge.
Shanghai-based humanoid robotics firm Robot Era has raised more than $200 million in new funding led by logistics giant SF Express. The company designs and manufactures bipedal humanoids targeted at industrial assembly, warehouse logistics, and commercial service roles. The new capital will fund a fresh production line in Suzhou and expanded field trials with SF Express's parcel handling network. Robot Era joins a wave of well-funded Chinese humanoid firms, including Unitree, Agibot, and Galbot, all racing to commercialize before United States rivals like Figure and Aptronic. The deal underscores how aggressively Chinese logistics operators are placing direct bets on physical AI as a labor automation platform.
That's your briefing for Tuesday, April the 28th, 2026. For DX Today, stay curious.